All right. Happy Wednesday. Hope you guys are doing well. Gonna hop into the wonderful world of digital assets, along with anything else you guys want to get into. Japan, if you don't know, is swapping dollars for yen, pushing that back down. So that's just good for the yen. Not what we want for appreciation on digital assets or adoption, but good for their currency. So I don't think that'll last a whole lot longer. They don't have a ton of reserves, yes, left to be able to continue to do that. The Fed could, give them a line of credit to be able to issue swaps there. And they're basically borrowing to borrow more time because they're in a death loop is really what that ends up being. So maybe they realize that. Maybe they'll go ahead and push things over to, some of the new systems that we're hoping for. But really still kind of waiting on oil to kick off. Really, the conflict in the Middle East has not escalated in a meaningful way to be able to drive oil to higher prices and impact Japan's economy. So I don't know what the catalyst for oil is going to be. That's what I'm watching is WTI crude priced in the yen. If we do see that spike, then I think that's what's going to be the kind of push things over the edge. I do want to start off on a slightly different topic than the macroeconomics tonight. Aside from what I just spoke about there, if you don't know, we brought Mikkel on as an advisor for Digital Wealth Partners, which is the RIA underneath the family office. We specialize in digital assets and the management of those, provide financial advice and wealth management for those that have large allocations to digital assets, and provide diversified funds for people looking to gain exposure. If you don't own a bunch of digital assets, but you have access to capital, family offices, RIAs, TAMPs that are looking to get into this that may not have the expertise. So with that, Em and I were going through some models earlier today, just with some of the things that we can do with XRP in particular, and building that out for clients. One of the things I haven't talked about in a little while that, him and I went over a lot was loans against assets are not taxable. So when in the models that we were going through earlier, we're able to put the XRP to work in some capacity to earn a yield on your asset. And, built out some cool functionality where you're able to increase your XRP position or, take a portion of that into cash and pay yourself some income. And what I was explaining to him, when you are earning yield on something that is taxed as income. Okay. So if you have a spouse and you're here in the US, I'm just going to speak to tax brackets here. If you're north of $650,000 a year in income, you're going to owe Uncle Sam 40% of that, which is pretty steep. Short-term capital gains are taxed as regular income. Long-term capital gains have a little bit different tax structure. If you're in Canada, you're taking loans. You're not taking profits, because if you do, they're going to rake you. Capital gains there is 2/3 of whatever you make. This the government's going to take from you. So that's what wealthy people do. Wealthy people accumulate assets. They leverage debt against those assets at reasonable interest rates. They then deploy that tax-free capital that they're going to get as a loan on their assets into other things that generate enough cash flow to service the debt and then compensate them as well. So what we were working through is, and I don't know what will happen, right? So we're speculating on some of this stuff because we don't have all the amendments and information in place yet to be able to actually know for sure. But one of the things we're looking at is, if you have XRP that is put to work and earning a yield, again, those distributions can be paid in kind or in cash. And are we going to have the capability to leverage loans against XRP that is in a liquidity pool or loaned out in some fashion to be able to earn interest? I think you will be. And the reason for that is I kind of think about this like a HELOC against a home that's rented out. Okay. So imagine you have a home, you've rented it out, and you've got somebody in there that's more than covering the payment. You locked it in a 30-year mortgage at 3% interest. Let's say it's a $500,000 property. So your payment per month is like $2,500. Okay. That's probably off on the payment, but just bear with me. Then you're renting it out for $3,000 a month. Okay. So it's enough to service the debt plus some extra. And obviously you have to, cover costs associated with maintenance on the property and some other things. And maybe you have a property management company that is, maintaining it for you. And so maybe that's where the extra goes every month. But the tenant that is living in the property is paying down the interest and the principal on the note that you have. And you're able to leverage that against that. So I don't see why there would be a difference in being able to leverage debt against the asset that is in a liquidity pool or being used in some other capacity to produce, interest of its own. And if you're able to leverage debt against that, then you could use the interest it's producing to pay off or service the debt. And so we were building out models where basically we can discount cash flows back for whatever returns you're going to get on an annual basis, look at the interest rate that you'd be borrowing at, and then be able to leverage loans against your collateral and be able to completely wipe that off within 12 months. So you basically can just take another loan every single year for the full amount of the interest that you're going to be accruing, minus whatever the difference in the interest rate is. So anyway, building out things like that to be able to display for people as they come work with us and hold their XRP with our firm. The main goal for anybody that's working with us, Warren Buffett, his number one rule is don't lose money. Our number one rule is don't lose XRP. So always trying to make more of it, never put it at risk, use it in a very intelligent way to be able to achieve the goals for our clients while also managing risk and downside and making sure that we're accumulating more of it over time. So that's the stuff that's coming down the pike. That's what we're working on there. I am not a financial advisor. I can't give financial advice, but our team can. And so I work with them in a limited capacity, give them my thoughts on things, and they're the ones that are putting things together. So anyway, we'll go ahead and get into the questions. As always, whatever you guys want to run up tonight is fair game. It can be digital assets, it can be estate planning, it can be LLCs, it can be trusts, it can be mitigating taxes, it can be philanthropic stuff, it can be random questions about personal stuff for me. It's open. So we'll go ahead and hop into the questions. And as always, appreciate you guys being here on a Monday night. Sorry, it's Wednesday. Wednesday night with me. Let's see here. We have Striker Fam says, good evening, Jake. So first off, hope all is going well out there in Texas. It is. I saw news about flooding and heavy rains inbound. Stay safe. Haven't seen anything yet. It has been wet here. It always is. So you have kind of the rainy season before the summer here, and then we'll go months where it's just a drought and 100 degrees every single day. It's actually been kind of it's been really moderate and nice here lately. Almost, got some mosquitoes, but aside from that, it's pretty nice. This is a good question. Atlantic Living says, I can't help but notice Cardano, Usco, and Paulo don't share the same enthusiasm toward XRP. These are extremely smart individuals. Do you believe the reason is very poor price appreciation? Yeah, Mark Usco and what's Paulo? I can't think of his first name. Yeah, I watched the video recently where Paulo in particular, was saying don't bet on XRP this cycle. At the end of it, you only have a 3x, and you could have made a 50x, and you'll be mad. I'll say this about Solana, okay? And I actually made people are nice enough to make introductions for me, and I really do appreciate that. But sometimes I run into an esoteric crypto bro, and I don't tend to get along with those people very well. If you believe that Solana or Ethereum or even Matic are going to be the networks that enterprise applications are tokenized on and real world assets sit on and are transacted, I don't have time for it. Solana goes down all the time. Enterprise networks. So to give you an idea for tolerance, the tolerance for Microsoft and their products is like the downtime is like 3 seconds a year is their tolerance for downtime on that network. So for Solana to be down hours or days at a time, that's never going to be adopted in enterprise use case by companies like that. That's one of the reasons I'm bullish on the XRPL, and I'm positioned there. I'm not a maxi. If you could show me something better, I'm all for it. But it's never been down. It's never had a problem for 12 years now. So enterprises will adopt that because it's going to be up all the time. The latency is extremely low. The fees are extremely low in comparison to some of those other ones. You're not batching transactions on a layer 2. It's a layer 1. So I think for the use case, transmitting value and payments, it is the winner. It doesn't have the best smart contract capabilities yet. Obviously, they're working on that with some of the amendments, and the throughput actually isn't where it needs to be able to scale to like Visa or PayPal or MasterCard. Right now, TPS on the mainnet is only like maybe 1,500 if you really pushed it. So there's going to have to be a subnet that's implicit or explicit to the network that allows transactions to scale. Is that Cobalt? Is it something else? I don't know. I think Paulo and Usco, and I would say most financial advisors and people in the space today, people like history on stuff. Okay. So as an example, if you were to go to your normal financial advisor, they're going to show you a chart dating back to the 80s. They're not going to show you anything before that. They're going to give you the, standard 40-60 allocation between equities and bonds. They're probably going to have you overlapping a bunch of stuff within the mutual funds and money market accounts that have the same allocations multiple times. You're probably not going to be properly diversified. They really don't understand market cycles over a 100-year period. They're looking at the last 50. While we have had interest rates going down the entire time, a lot of the constraints that have existed over the past 50 years are about to change radically, and I don't think most people are positioned for that. And same thing in crypto. People, they look at these 4-year cycles that have existed up to this point, again, during the same conditions that the financial advisors kind of allude to, over the last, 13 years since Bitcoin's inception, up until, just recently here, we've had a rate hike. We've had QE the whole time, quantitative easing. We've had a reduction in interest rates or low interest rates, cheap capital, a bull market in the stock market, easy money. anyway, those things have changed in the past year. A lot of those constraints are very different. You also, and aside from that, now you have institutional capital in Bitcoin, whereas you didn't before. I mean, you might have, right, through OTC desks and other positions, but not through ETFs. Okay, so and I'll explain why that's different and why we're not going to see the rotation into alts like we would have in the past. So the ETFs, when they liquidate, because they're not people that hold this long term. People trade ETFs. If there's a significant downturn in the market, you will see mass liquidations of the ETFs. That capital is not going to be rolling into altcoins. It's not on an exchange like there has been in the past, right? So these investment banks are going to divest into cash. They're not rolling it back into the market. They don't have the capability to even do that if they wanted to, because it's an exchange traded fund in an institutional account. They don't have even the capability to go through and swap for any other altcoins. So when that cash leaves, it's not rotating into other things. It's literally leaving the market. And so that's one constraint that's extremely different for this cycle than there has been in the past. You also have all these other headwinds, right? And you have regulations looming. So, these two gentlemen, Yusko, and they both get it too. They understand the underlying premise of the technology, where the space is going, how adoption is going to happen. But I think a lot of people are hoping and positioned for another cycle to transpire like they have over the last four. Like everybody thinks it's a foregone conclusion that Bitcoin goes to 100K. I don't. I think we've topped out. Maybe we get back to 75K, but I think that was the top. 73, whatever it was. And I could be wrong. I don't have a crystal ball. This is just my thesis and my bias, right? So I think we're a lot further along in the cycle than people anticipate. We had the run up previous to the halving, which has never happened before. It's always been post halving when there has been a supply shock in Bitcoin, right? Now we've had the supply shock and it's just kind of held and trended sideways. We haven't had real appreciation since then, even though there is less and less Bitcoin on the exchanges and the OTC desk for the ETFs and other large players to purchase. You do have people that are probably some of the largest holders of Bitcoin that have ever existed. There definitely are, right? The ETFs, these funds, you have silos with significant allocations that if they decided to divest for whatever reason would cause huge market impact, right? And it doesn't take but stablecoin regulation for Tether for them to have to get compliant and remove their Bitcoin allocation, which is like 5.13 billion or something. Like 6% of their supply is backed by cash. And I think similarly, 6% of their total supply is backed by Bitcoin at this point. So to be compliant with regulations, if those were to be rolled out, they would have to divest from that. They would have to sell their Bitcoin onto the market. That causes a significant downturn, especially if it was all at once. You would see, a big drop in the price, and the ETFs again would start selling. And a lot of that's traded by bots also. So if there's certain levels that are hit, they're just going to liquidate their positions. And again, they're not rolling that back into altcoins. It's just leaving the market cap, total market cap for crypto. So, rambling on here. I think those gentlemen are looking at previous cycles and anticipating similar constraints within this one. And everybody says this time's different. I'm going to go on the record and say I really do believe this time is different. There's just a lot of constraints that I think are different than past iterations in the market and cycles. And so with that, I think we're going to see significantly different results. And so for them to be as bullish as they are on some of the altcoins and believe that, we're going to see a repeat and a rotation out of Bitcoin into those, I just don't see that happening. So, and they don't believe that utility is right here on the horizon either. again, they think that we get one more cycle before that's really comes to the forefront. So good question. And I appreciate, you always being on here and asking good things, Atlantic Living. Appreciate the super chat here. Honest Aim. He says, Jake, Matt, and crew, thanks for all you do for the Beyond Broke Mastermind. Saw your ETH show. Looks like the creation crooks will get off regardless, if I understand your thoughts. Appreciate you and the mastermind and everybody there. That's kind of what it sounded like to me too. I think Joseph Lubin and some of the other bad actors, there's got to be some consequences for them, right? What they did was not okay, and there are losses and damages, and there should be some disgorgement. Ethereum is, I don't want to say centralized, but not as decentralized as a lot of people believe it to be. Like was mentioned in there, the people that are the whales basically control the network and are incentivized with the staking rewards at this point instead of, controlling the miners like they used to. I'm hopeful is what I would say. I'm hopeful that the systems here in the U.S. will serve justice as it's due. But everybody gets due process. That's your right. You get to go to court and be judged, and then, based on the jury and the judge, there should be a ruling, right? So I'm hopeful that we do get that. I'm hopeful that there is a case, and the people that would be justified in receiving benefit from that scenario. Joseph Lubin and Vitalik obviously are very well off after Ethereum has done as well as it has. I think Vitalik moved to a jurisdiction where he can't be extradited, and I'm sure Joseph Lubin, if he's smart, did the same. So I don't know that we'll ever see justice on that deal like you're pointing out here, but I'm hopeful. So appreciate you watching that. If you guys haven't checked that out, I was on that today. It was the ETHgate conversation. Ray Fuentes put that together with Jimmy Valley, Molly Elmore, Stephen Rayoff, and myself. And so a lot of good insights there, and it was a pleasure to be a part of it. Let's see, scroll on down. The people think that there's a silver squeeze coming. You might be right. People have been waiting a long time for that. Like I mentioned before, metals are more of a hedge against inflation, but their markets do swing too far one direction to the other. Silver tends to move after gold and have a pretty significant upside most of the time in comparison. It's a bit more delayed, and so I know a lot of people that are positioned very heavily in silver that I hope do really well. A lot of the people that I follow, I made a list of a lot of the macro economists that I watch on a regular basis and put that in the mastermind group for everybody. And Andy Scheckman, there's Peter Schiff, a lot of people, Lynette Zhang, all those people are on that list. Jim Rickards, and they all seem to think that metals are going to do pretty well. I don't know what the real ROI of the metals is, because if we do short squeeze in silver, JP Morgan can just squash that. They own half the world's silver. You're not going to beat them, okay? And then when they want it to go and appreciate, it will. I'm sure that they at some point will want to raise the value of the silver that they hold. Maybe to shore things up with their company if other things were to not do so well. And so it'll be if silver does go up in value, it'll be at JP Morgan's discretion, in my opinion. This is good. Pay me an XLM. He says, your thoughts on blockchain companies acquiring banks, DeFi company, Congrats on your new team member. Thank you, brother. We're trying to find the best of the best of the best. Men in Black. I don't know if you get that reference or not. I like Will Smith and his movies. Thoughts on DeFi company acquiring bank DeFi company? Not sure the context here, but there's a bill that they could pass that would make exchanges illegal and basically roll them up in the banks. That's kind of what I see happening. Money transmitter licenses aren't going to cut it. You're going to have to be a broker dealer. You're going to have to be compliant. You're going to have a securities license. All the things that should be in place for this market, right? Or they should create other certifications or licenses that are beholden to the same standards that we have in securities. All of the riffraff and BS that goes on in this market would change very quickly if that were the case, because there'd be consequences for actions, right? Right now, there's no consequences. You can mint a meme coin on Solana and get a bunch of people to go in on it and rug everyone and walk away with the money, and too bad. And there's no disclosures. There's nothing like traditional markets to prevent losses like that. I don't like that. But more power to the people to do it. I just know that that's not anything that I'm going to touch or play with. So I stay away from it. But as far as blockchain companies, I think you're alluding to the fact that I think it's going to be the other way around. I don't think blockchain companies are going to acquire banks or DeFi companies. I think that banks are going to acquire exchanges and start beginning to leverage DeFi for some of their stuff and build that out. I could be wrong, could be the other way around, but again, depending on the blockchain company, it's got to happen one way or another. The licenses need to be held with both, and it's either the blockchain company acquiring the bank or the bank's acquiring the other one. Would be my best guess on that. Here we go. CJ says, "You're the best, brother. Appreciate the kind words. I try my best. Just trying to help people. What will it take for XRP to be deemed a tier 1 asset anytime soon? Also, thank you for the Wyoming LLC, professional, easy, fast. Awesome. I'm glad we were able to help you out with that and get that taken care of for you. And now you're in position for mitigating taxes and having a lot of flexibility post liquidity event. So with the LLC, what would it take for it to be a tier 1 asset? It would have to be deemed riskless. So that is what a tier 1 asset in the banking system is. The BIS, the Bank of International Settlements, is who deems something or grades assets on their risk rating, right? So prior to 2019, gold was a tier 3 asset, which I don't know how that gets to be the case, but there's enough volatility that they felt that, it was a tier 3 asset. U.S. Treasuries was the only riskless tier 1 asset that could be used to back derivatives as collateral up until 2019. And since then, it's been gold and treasuries, U.S. Treasuries in particular. You would need some type of backing for XRP or utilization at scale where it became systemically important and it was a higher value than it is today. And they were absolutely certain that there would be no downside risk to holding XRP. If all those constraints became true, then the BIS at that point could designate XRP as a tier 1 asset in the banking system. And all of the wonderful things that I talk about as far as leveraging loans against it at premium rates, utilizing it to produce income, some of the things I was discussing earlier are kind of predicated on that thesis, right? I don't know time frame on that. Your guess is as good as mine. I have no. It could be tomorrow. It could be years from now. I don't know, but I am confident that it will happen. So, hopefully that's helpful and answers your question. I appreciate the kind words, like I said before. Here's one. Komel Rize says, "Hey Jake, great format for Q&A. Thank you. Appreciate you hopping in here and asking good questions. Question is, assuming all of the publicly traded stocks were to be tokenized on the XRPL for instant settlement, how long would you think it takes for that transition to take place, or the settlement of the stock?" I'm going to go with for the transition to take place and all the stock market to become tokenized. Faster than you think would be my answer. And the reason for that is the DTCC acquired Securrency last year in September. Know their chief strategy officer there. I'll see him at Consensus. He's no longer the chief strategy officer. Securrency became the digital asset division of the DTCC, and he walked away with a nice check. And then you've seen BlackRock also, cut a deal with Securitize. R3 also developed Project Ion in tandem with the DTCC or the clearinghouse. And it's my belief, as a speculation, is that that's currently running in tandem with the traditional system. Until there's enough liquidity on the main net or within an infrastructure to be able to settle all of those assets, I think that it'll just continue to run in tandem and won't be utilized until there is a network that has enough liquidity on it to be able to settle those with the requirements to meet and integrate with, Corda to be able to do it. So we know what assets Corda can use to settle. Only one of those has legal clarity as not a security here in the US. So you can take your pick on what I think it's going to be. But I think that they could, I don't want to say turn it on tomorrow, but possibly turn as soon as they need it. I think it's there running in tandem with the capability, right? And all the clearinghouses and all the brokers would have to be ready for that. Do they have integrations on the back end of those? We know Robinhood is integrated with crypto. We've seen a lot of other ones that have done the same. Do they have the back end capability to tie into that at scale and make sure that everything's kosher? I don't know. But I think we've had long enough. I mean, the DTCC and Project Ion and R3 finalized that stuff back in 22. So 2 years ago. I mean, I think they could have figured that out with all the people and all the parties that needed to be updated to meet that criteria within another 24 months beyond that. It's my speculation. Again, I have no proof of that, but I think it would probably be a little bit faster than most people think. Just my opinion. Raul Paul, there you go. That's the gentleman. And he has there's a channel that he runs that's pretty good, and that was actually on my list of people that I follow. I follow him. Real Vision. If you guys don't know it, go check it out. Sharp guy, good investor. Has done really well on Solana and Ethereum and some of these other tokens and networks. He does own XRP. I know for a fact that he does and has an allocation to it. For him to speak to it the way that he did reminds me of like Jamie Dimon when he was, talking down Bitcoin, but he was buying it at the same time. People talk their book when they have the capability to do so. So, we'll see on the other side if he does have a significant allocation or not. Payment XLM says, can you give me a recap from your roundtable today with Ray? Thank you. Ray asked a lot of really good questions about the beginning times when Stephen was with Vitalik and Joseph, at the beginning of the Ethereum Foundation. They did not follow his procedure in the ICO. Otherwise, it would have been designated not a securities offering. They didn't follow his recommendations. He mentioned that, multiple government agencies have been proven that they colluded against him and fabricated evidence to basically imprison him for 4 years until he was able to get out and prove that, they fabricated that evidence and they actually knew that he was innocent, up to 12 months before they even began prosecuting him. So very interesting gentleman, very fantastic background, some of which I didn't even know. So he has another product that he's built called Clone, and it basically takes the constraints that exist in this reality and then puts it into an augmented world. He doesn't really want to call it a metaverse or anything, but basically the premise behind it is you could build DAOs or governance systems within that ecosystem and see how they worked and what the reaction from the public was, and if that they would be viable in our world, right? And I think that's one of the benefits of AI and augmented reality that people really haven't explored yet. So one of the things I thought when, just 3-4 years ago when I got into entrepreneurship, I mean, I've been in and out my whole life, but when I really kind of doubled down and said, look, like, this is what I'm going to do. And a lot of the times people have great ideas or what they think is a great idea, and they don't validate it in the market, and they build a product and it flops because there's no demand for it. Or people don't understand that they have the problem yet. I've found that the best solutions when creating a service, product, or company is you actually solve your own problem so that you're intimately familiar with the issue, and then create a solution that solves that for yourself, and then you can sell that to other people. That's a lot of what I've done with the family office, and then also what we're working on for the fund administration for the SPVs. So anyway, the possibility that you have there is to validate, a thesis within that alternate reality, and see if it's going to work or not. And so then you don't have to invest the time, capital, and resources in the real world and take a loss, take an L. You can just try to validate it in that alternate reality. And if it takes off and goes, and the data is correct, then you should be able to bring that over to the real world and do the same thing and know that it's going to work, right? So you can fail faster in that world and with no consequences. And so I think that that's a great way that augmented reality and AI can be used to validate, real world applications, whether they're going to be sufficient or not, and then also see the downstream effect of those things, right? So anyway, so that was one of the topics, was Clone, which is his product. Jimmy gave a very eloquent background on Jay Clayton and Bill Hinman and how they met in like 2004, way before any of this, and how basically he had linked China and their involvement, and he had connected a bunch of these dots for how people knew one another from years and years beforehand, which was really interesting because it's not anything that I had discovered or known about. And so, and he really didn't even have a problem with that. It was really the corruption and the collusion, and then also the them coming after the opposing company Ripple that could compete at scale against the Ethereum Alliance, and using the SEC and their positions in power to pick winners and losers. I don't think that that's right. I don't think that it should be free market capitalism. And if that's the case, and you gave clear roads, clear rules of the road as a regulator, which is what you should be doing, you shouldn't be choosing which companies are winners and losers. You should provide the rule book for everybody to participate under, and may the best man win. That's free market capitalism. But that's not what's occurred, right? And so that's the chip on Jimmy's shoulder. And a lot of us, there are damages. There should be disgorgement paid, and other things and you'll never really understand the full scope of what could have happened had the SEC not come after Ripple, right? Like, what level of adoption would the network currently have? Because there's already significant partnerships. We know that Bank of America has been a partner with Ripple since 2018. R3's been around a long time. A lot of people that I talk to about R3 are like, oh, they're still around. Like, they're good at, taking money from the banks, but they really haven't done anything. They can't settle. They don't have a native asset to that network to be able to settle transactions and get the adoption and scale it. Right. So they spend all this time building things out that are great. But until that piece isn't, like, you need digital identity, you need custody, and you need a network that everybody utilizes to settle across an immutable ledger that is a standard, right? You have a messaging standard, which is the ISO 2022 for that component, but you need a settlement layer. And until that's in place, along with the other two things I mentioned, the custody component and digital identity, we're at a standstill. We're not ever going to get forward progress. So anyway, I provided some insight, and asked some questions. About an hour and a half long is how long I was able to stay on there before I had to hop for another meeting. I think they hung out for like another 30 minutes after that. So if you do have the time, I think it was a great interview, and a lot of good questions and a lot of value. And I'm probably not doing it justice, giving you a full recap of it. So, run it through ChatGPT and get it to give you the highlights, I guess. Here we go. Dan Foster says, I just sold my home and I made a healthy profit and would like to use some to make more money. But other than XRP, I know zero about investing. Well, I always try to work backwards, Don. So what do you want, right? So let's say, and what's feasible, right? Because you got to be reasonable about stuff. Let's say you just want to offset a bill and not have to worry about it. Okay. So you're looking to put the money to work somewhere that pays you. Maybe it's just $500 a month. Maybe it's your electric bill that it would ease your life a little bit if you had an extra $500 a month. You could do that a bunch of different ways. So you could look at a money market. You could look at an annuity. You could look at a mutual fund. You could look at treasuries, short-term treasuries, and roll it. You could look at buying a business, right? If you go in with somebody else as a limited partner and they're the one that's managing it, there's some risk associated with that. So you need to have better margins and probably a higher return to justify the risk. The more money you have, the less risky you have to be to generate significant profits and income to be able to pay bills. But I would start with the end in mind. So I'm going to figure out what I want, what's reasonable for the amount of money that I have, and then place it somewhere where it's very low risk, maybe medium risk at most, that's going to continue to produce cash flow to offset my lifestyle and my liabilities. And hopefully it's in an asset that appreciates also, right, with inflation. So that's why people, real estate's never going to go away. They're not making more land. And people are always going to need someplace to live, I'm making general statements here. I could be wrong on that too. See, maybe there's this shared economy and everybody just rents everything and everybody's happy. That's what they're saying 2030 happens. Maybe so. I'm not going to complain about that. As long as I'm getting part of the cake, for part of the ownership, and I can rent it out and earn some income for myself, and somebody else can use it too. It's a mutual benefit. So anyway, that's. And if you want to work with us, again, you can book a time with our wealth management firm. We can walk you through that and provide you the options that we have, depending on the amount of money that you have. We might be limited, right? So we're looking for at least $250,000 or more to deploy in most applications to be able to earn passive income. We do have stuff as low as $50,000, but up to you. Would love to have a conversation with you if you think it makes sense. On down the list here, we have Karen's asked a good question. She says, can you go over any situations, conditions that would cause you to reevaluate your position on XRP exit prematurely? Sure. Yeah. If I was presented with new data that I didn't know before that was detrimental to the long-term benefit of the network, It would have to be very impressive and substantial and come from an authority that I respected and trusted. But if I was presented with some data in that respect, I would definitely reconsider, reevaluate my position, and potentially exit prematurely. It would have to be devastating, though. It would have to be like, I talked to Trump at Mar-a-Lago, and he says, "Hey, we're not going to use XRP. We have our own asset, that we've built on the background, and it's just not going to happen." And I'd have to hear it from the horse's mouth, right, on that one. Like, I would probably be a bit rattled on that one. I don't suspect that that's what he would say, but that would be a circumstance, right? But that's the level of authority that it would have to come from, and it would have to be like an absolute no, we're not using that, and these are the reasons why. I would need justification for that also. So, I have a connection with the advisor for blockchain for the White House currently. So, anyway, yeah, it would have to come from a very high authority, and it would have to be an absolute no, we're not going to use that at all. And even if it came from the U.S. government and they said they weren't going to use it, I would have to hear it from multiple other governments around the world also, and other authorities that I think are involved with the network. Like, let's say Yoshitaka Kitao tomorrow came out and said, I'm reneging on everything. We're not going to use XRP in any of the banks by 2025, like I've been saying for years. I'd be a little hesitant on that one. But that's the level of authority it would have to come from, and it would have to be like a nope type situation. And then I would think twice at that point. This is good. Victor Wong has asked, "Hey Jake, what are 5 lessons or 5 values you're trying to teach your son to navigate and be successful in life?" This is really good. So I'll pull this up here. I'll give them to you. I want to make sure that I have all of them here. Is it in my other phone? It must be. It's in my other phone. Sorry, I'm not prepared for this. This is obviously impromptu. All right. So these are my family office's core values. I'll just give them to you guys. These, you can incorporate it with your life if you think it's meaningful. But these are things that I think about when I'm making decisions, and hopefully I'm able to instill in my son and my family. So we use Pantheon thinking. So we're trying to plan 100 years from now. We're always long term, whatever's going to benefit the long term versus the short term, even if that causes short term pain. That's the choice we make. Okay. And sometimes that's having hard conversations. Sometimes it's saying no to things. I said no to something yesterday that was very difficult for me to say no to. I've got too much on my plate. And if I were to go in that other direction, it jeopardizes a lot of the other stuff that I'm doing because I don't have the bandwidth. So, and that's also being aggressively patient. I don't know if y'all have ever heard that term before or not, but diligently working every single day to continue to improve things, but also knowing that it's going to take a really long time. So being consistent, doing things that are required, having daily disciplines to make sure that you are capable of getting where you want to go. So anyway, yeah, you want to be, that's one of them. Another way that I say that is you're planting seeds today that your grandkids will, you're planting seeds today that'll grow trees that your grandchildren will sit under. So there's going to be lots of stuff that I do in my lifetime that I'm never going to get to see the fruits of, or the full fruits of. But my kids might have the capability to really benefit, right? I'm trying to set things up so that not that they have an easier life. I don't want my children to have an easier life than me, but I want them to have advantages. And same thing for their kids, right? They still need the hardships to be able to get the skill sets, traits, and beliefs so that they can be successful and do what they need to in life. But, I'm trying to plant seeds now that I probably won't even, like I said, I won't get to sit in I won't get to sit in the shade of the trees that I'm planting today. So that's all kind of like one core value. I try to be selfishly selfish is the way that I put it. So I always, when I'm working with somebody else, I try to align interests. So I always ask the other person what they want. Where are you going? What's your dream? How can I help you get there? And then I try to work off of that to where they win and make my interest aligned with theirs so I get to win too. But I always try to put their interest almost ahead of mine when I'm working with somebody. Another way that I've heard people put that is you dream so big that other people's dreams can fit within yours. And that's how, you can really pull people into your life that are going to be beneficial for you and your team long term, is you have a vision so large that theirs can fit, inside of yours. When I'm and same to the same token, when I meet somebody, I've made it a point to try to meet somebody new every single day over the last 4 years. I probably met over 3,000 people in 4 years. And in those conversations, I always try to give first. I don't have any expectations from the other person. I'm always trying to provide value before I ask for anything. Just so that there's reciprocity, right? I'd rather build up a bank of reciprocity where they feel like, I've done good for them, and then they ask me. I want the other person to want to help me, but not just take from them, right? I need to give them enough. And sometimes it doesn't even, I don't expect them to be the one to return the favor either, which is hard for people. When I was younger, I definitely wanted that person that I helped to help me. But as I've grown older, I know that if I help other people, the universe helps me. It doesn't have to come directly from that person. It's going to come back to me in some capacity. Sometimes they make an introduction. Sometimes they just go about their business and I help them and I get to feel good about it. And then it comes back to me in some other way. So you could also call that living in abundance, right? You're always giving. You don't feel like things are being taken from you. Discipline is another one, right? So you're doing the things you said you were going to do long after the mood that you said them in is gone, or doing things that you hate like you like them. Wake up and go for a run when it's dark and raining. Go to the gym when you don't feel like it. Read the book when you don't feel like it. Do the work when you don't feel like it. If you said you were going to do something, you should uphold that irrespective of how you feel. I think a lot of people are weak today. At least this is what I see. Okay. I'm not saying everyone. A lot of the people that are watching this probably not this way. But people look up any excuse they can to not go to work or not fulfill on a promise. While I'm the other way, I'm always looking for anything that I can do to make sure that I make good on my word and do more than was expected and try to outwork myself. So that's another core value. So that's 3. You asked for 5. So I know I'm rambling on here, but I'm trying to give you all of them. Loyalty. I mentioned this before. I choose people that choose me. So I've had a lot of people in my life not choose me in certain circumstances, relationships, other things that I've done previously. I'm much quicker to cut those people out of my life at this point. I don't have time for them, right? If we don't have aligned interests, like I said, so the esoteric crypto bro, he was super respectful on the conversation, but we immediately just didn't jive. And he was like, I don't think we're going to be able to work together. And I was like, I think you're right, man. I appreciate you taking the time and I wish you the best. Just split ways, and you're going to have those people. There's going to be people that did you come in contact with that you just don't jive with for whatever reason. And it's not going to matter how badly you want to align interest. It's just not going to work. So I'm just, instead of trying to force that, there's 8 billion people on the planet. There's going to be a lot of people that I piss off or don't jive with me for whatever reason, and that's okay. There's going to be a lot of people that I get along really well with and foster relationships with and make a lot of money and do a lot of cool stuff with. And so I'm looking for those people. And then lastly, similar, just kind of goes back to the other question that Karen had asked. She said, what would make you reconsider something? I always try to be open-minded. You have to have biases to make decisions. And so you have to make decisions. And I would rather move fast and break things and figure it out after that. And sometimes that causes problems. I probably need to slow down on some of that and think through things a little bit more. But having the humility to know that you don't know everything, or know that you know nothing, really. Like, I know a lot about a few things, and the majority of stuff I am not an expert in any sense of the word, and I'm willing to pay the other people that are. And I think that's where maybe I differ from some others. And that's what I want to teach my child too, is you just get really good at one thing or a couple things, and people will pay you a lot of money because of your knowledge and expertise in that area. And you don't have to be a jack of all trades. A jack of all trades is a master of none, right? Like, everybody's heard that, but you don't really know what it means. Just get really good at one thing and be able to, command a premium on your time and your expertise. And then you can use that money to pay other people that are experts at whatever they're doing. I'm not handy. Okay. My wife and I, fixed this house up. I broke more stuff than I fixed in doing that. And I learned very quickly that I'm not handy. I wasn't taught all that stuff. I'm happy to pay a professional that is a professional plumber or an electrician or whatever else that they are, and compensate them for their time and their expertise, just like I would want people to compensate me for my time and expertise, right? So anyway, that's my 5. If I was going to name them off, it's be aggressively patient, live selfishly selfish, or live in abundance, discipline and integrity, loyalty, and then humility and being open-minded. So kind of sums it up. Great question. Appreciate you asking it. And, hey, if you want to take some of those on for your core values, I would suggest this, irrespective of if you like my core values or not. I would write down your core values and then use those to make decisions. And if I always make better decisions if I look at that list. If I'm thinking about doing something and I'm like, and I look at the list, I'm like, the answer is obvious, right? Like, if these are really my core values, then I should be acting in accordance with that. And I fail, I'm not perfect either. I messed up on lots of stuff. And I don't always live by the code, but I do my best to. And like I said, the more frequently I look at that, the more aligned with it I am. So, let's see here. Abel says, do you think the Ripple case will end this year? Yeah, I think that we're going to get a ruling on the case by the judge, and that will be the end of it. I don't foresee an appeal. I could be wrong, but that's my sense of the situation. Scroll on down here. Philip says, hey buddy, thanks for keeping us all motivated, more informed than we ever thought possible. Thank you for the kind words, Philip. I enjoy this. I like being on here and just chit-chatting with you guys and answering good questions like y'all ask. He says, with the LLC I have started with your group, can I place equities inside the holding company as well? Yes, you can. You can. It's a holding company. It's a management company for your investments. And, obviously the language in the template for the operating agreement specifies digital assets in particular. but you could, add other types of assets to that. I wouldn't add assets that have external liabilities or a high propensity for a lawsuit to occur. Equities, you're not going to have that with. But let's say you wanted to add a real estate property to that LLC. I can't tell you what to do, but I would recommend that you silo that risk in its own LLC. Because if you have somebody fall on the property or somebody sues the property for whatever reason, you don't want that commingled with other assets that you don't want to lose. You want that risk siloed to just that property so that it can't be pushed to the rest of your estate. So equities, private investments, those tend to be fine. Even private investments, especially if it's an M&A transaction or a direct investment in a company that's not somebody else's SPV that they're managing, you probably want to set up an SPV underneath your holding company, which is a special purpose vehicle, which is basically an LLC that's for the purpose of the investment. So it silos that risk. But you stated equities in particular here, and so yeah, those should be fine. Let's see here. People are being nice here and saying click the like button if you are in the chat. It does help the algorithm and help the channel and help more people see this. So if you like the content, if you're getting value from it, please like, thumbs up, and subscribe to the channel if it's beneficial for you. Here's a good one. Hazy Days says, if you have a revocable trust, is that sufficient to secure your crypto? Secure is a ambiguous word. Yes. Is it ideal? No. You use the word sufficient. So I would say yes, it's sufficient. It's not ideal. And the reason for that. So if it's a revocable trust, it's fine. It's a living trust is what it is. And it's probably filed in whatever state you live in. So you're not going to have the anonymity, and you're also not going to have the benefit, unless you live in Wyoming, of the digital asset regulations that exist there and the benefit for that. The other component is living trusts are great for assets that aren't going to appreciate substantially in value or produce cash flows. So the home that you live in, vacation properties, and again, you would want those siloed out inside LLCs inside that trust. Cars that you wanted to pass on, family heirlooms, gold and silver. I see those things quite frequently in a revocable trust or an irrevocable trust that's a living trust. Most often you're a trustee on the living trust also. So that makes it easier to penetrate and for creditors to come after assets in there. If they are pursuing you, they can pierce the veil. And it depends on who drafted it too, and if they put provisions in there to protect assets or not. Don't know how much you spent. Don't know what law firm you used. There's a lot of context here that I'm flying blind on. So it could. I guess the answer is it could be. Is the best professional answer I could give you. Ideally, you're going to use an asset protection trust for digital assets or anything that's going to appreciate substantially in value over time, and also produce cash flows. So we help our clients set those up in Wyoming. Cost on those or anywhere, we have a package that's just $25,000 all in. Makes it super simple and easy. But anyway, that's kind of the cost associated with that. Somewhere between 15 and 25,000 is what we see. If it's less than that, we do have options for less than that. I've seen some problems there. People don't necessarily have all the understanding or expertise that I have referred people to for lesser than that value, which is fine. We come together as a group within the mastermind, and we're able to answer a lot of questions for people and make sure that things get buttoned up and situated. Even if they didn't spend the full amount, on a professional that is proficient. But anyway, ideally you're going to have an asset protection trust. And the reason for that is you're going to have a trustee that's designated to that. It's an irrevocable trust. So once the assets are in there, they're locked. You can't change it, which makes it a lot more bulletproof than a revocable trust. So I'm just giving you an example. Let's say you rear-ended somebody. You got your digital assets in an asset protection trust. You're no longer the owner. You're not the trustee. You're the grantor. You're not a beneficiary. You control the management company that controls the assets. You still have full control of the assets. You just don't own them. Okay. So you rear-end somebody. They see that you have some money. You're driving your G-Wagon. You're looking good. You get out in your Versace suit. I don't know. I'm just making up a scenario here. They think you have money, so they're going to come after you. They get oh, my neck, my back, and maybe they really are hurt. God forbid. But they get a lawyer. They're going to do a background check on you. They're going to see that you have that trust set up and that your estate structured a certain way, and they're going to be like, okay, here's the deal. This is what they're going to tell their client that wants to sue you. It's going to cost you somewhere between $2 and $3 million to come after this person. It's going to take 2 to 3 years to come after them, and you're probably still not going to get anything if it's in an asset protection trust and it's set up the right way. And most of the time people are like, well, never mind on that. I ain't got that type of money. So maybe they do have that type of money to come after you, but you'd have to really piss them off. And again, even if they did come after you, if it's set up the right way, they're going to spend all that money and time and probably still not get anything. So that's the benefit of that. You're mitigating the risk of somebody suing you. If you don't own anything, they can't take anything, right? Can't pay them, can't get blood out of a turnip. But you still control everything over there. And obviously, if you're running the management company, you're probably compensated in some fashion by the income that's produced by the assets, that rolls up to the management company, potentially into your living trust that you already do have set up for your revocable trust there that you are the trustee on. So you just want layers of separation. You want the onion. Is it sufficient? It could be. Is it ideal? Absolutely not. Let's see here. Scrolling on down. Appreciate everybody coming in the chat late on a Wednesday. Zach Rector, how are you, brother? Hope you're doing well. Glad to see you got your YouTube channel back and you're rocking and rolling again. It's good to have you back on YouTube. Let's see here. This one's good. Thank you. He says, good evening, Jake. I appreciate your time and willingness to share your knowledge here. I appreciate you. It's been an absolute blessing. Just joined the mastermind group. Glad to see you in there, brother. Really, really good group of people. Culture is, I'm really proud of the culture that we've been able to build over there. Again, a lot of people have the same core values as me. You kind of attract what you're putting out into the ethos. I know that's a little woo-woo, but I believe it. And so we've been really blessed to have a lot of just really good people join the group over there. And I'm really proud of the culture that we've built in comparison to, a lot of the other communities that I've been a part of. And we're glad to have you as part of that as well. Oh man, it's late there in the UK, brother, or early, however you want to look at it. Big love. He says, I want to say thank you from the bottom of my heart. We've been in the mastermind since day one. You've given us more value than we could wish for. You deserve flowers. Thank you, brother. A lot of kind words from people. I get a lot of fulfillment from this. If you guys don't know, for me, I'm able to give back in some capacity and help other people. And these types of messages make it worth it. Like I've talked about this before, not every day is a good day. Everybody has trials that they go through in their life. And so to get these messages from people, it means a lot. And it reminds me, that there's a reason. Good things are hard, right? And they take a long time, like I mentioned before. And I'm glad to be here and be able to help people. So thank you. Shane says, thanks for helping set up the Wyoming LLC. You're very welcome, brother. Glad you got it situated before liquidity event happens. I don't think it's too far from now. He says he's thinking about consolidating all my crypto assets into XRP as you have. But watch those cryptos take off first when I do. I've said this before. I've owned a bunch of other stuff. When I do, I have a lot of stress for not having it in XRP. We do have a few other positions for some of the companies I have, but my personal stuff's all in XRP. So it's the only thing I'm sure on, and I'm willing to forego those other ones that you're talking about, right? To be in position when we do get adoption for this deal, far outweigh, in my opinion, any other gains that I could have gotten. And again, I think, and this is just my opinion, it's my personal bias, so take it with a grain of salt. Y'all know my position. You can tell me I'm full of it if you want to, and that's fine. But if XRP is given a designation as a tier 1 asset, I would be kicking myself fooling around with SHIB or Doge or whatever else that doesn't get that designation because of the benefits that that's going to provide me and my family long term, right? So just my bias, because I have that thesis that is what this becomes, and if it doesn't, then I'm wrong, right? And I probably missed out on a bunch of other things that could have been beneficial. There's probably, I've missed out on a bunch of stuff that I could have made profit on and rolled it back into XRP because I've been siloed for an extended period of time. But like I said, I'm willing to forego those gambles just to know I have a for sure thing. Oh, geez. He says he's from the UK. He survived 3 strokes. God bless you, brother. I want to just remind people the importance of being physically and mentally healthy on your journey. Absolutely. Like I said, I still have my daily disciplines. I'm a lot more lax than I used to be. I still eat about 80-20 on good food to bad. And I still walk, at least 3 to 4 miles a day, and I try to lift 5 or 6 times a week. So in doing that, I get some meditation and the mental clarity. Also take a lot of supplements to help offset and augment that as well. Because that is a priority. To be able to perform at a high level, you do need to take care of yourself and put oil back in your lamp if you are burning it a lot. So God bless you, brother. If you're still here after 3 strokes, you're still here for a reason. So whatever that is, I hope, you're able to fulfill on that and live your best life. And, the universe wants you here for a reason. So I'm glad that you've been able to survive. Hey, Kevin. I love Mr. Huber. He says, how much XRP could a woodchuck chuck if a woodchuck could chuck wood? Well, he actually says woodchuck could chuck XRP. I would say all the wood, Kevin. I think XRP can take all the wood. Let's see here. On down. A lot of people asking about price. Here's one about GameStop and AMC, which I thought, people might be asking about a little bit more than they have been in the chat. Roaring Kitty, back with a vengeance, driving. GameStop was down like 32%. It's a meme stock at this point. It's crazy to me that people gamble like they are in the markets. Again, not my shtick. Okay, it's too much risk for me. There's money to be made. There's lots of money to be made in a lot of different ways. I would rather have the sure thing. Anyway, they say appreciate all the education. Does the current GME and AMC need for real-time settlement factor into your domino? Yes, it does. Timeline, or is it just convenient to usher in the new system? So like I mentioned before, with the exposure to Bitcoin in traditional markets through the spot ETF, if they did have significant losses for the investment banks and it didn't rebound quickly, because they settled T+2, we're supposed to move to T+1 on the 28th of this month, which could utilize digital assets. There was some documentation that was presented on Twitter. There was official documentation by the DTCC that did state that. So do we get to see that on the 28th? That'd be great. I think we know which one it is. But yeah, I think that, back-end settlement of the stock market is a huge application for real-time settlement and distributed ledger technology. Hopefully the XRPL, that's my bias. But yeah, I think that there's, if and we've already, they're continuing to illustrate this, right? So we have limit up or limit down. And again, the clearinghouses are halting trading because they're fronting money to the brokers, and they're waiting for that to settle. And there is no accounting mechanism across all the stock, and it's not tokenized, so there's no way to know how much of it they've sold, if they've oversold or undersold, or they're going to have to freeze it and take stuff back. They need it, right? They're illustrating that with those two stocks in particular. Wall Street Bets, Roaring Kitty, all that stuff is, in my opinion, to illustrate the lack of instant settlement on the back end of the stock market and make people upset. So problem, reaction, solution definitely plays into my thesis, Brian, and I appreciate you bringing it up. Mark, he says, so thankful for your content. Thank you, brother. Thank you for being here. He says, do we think we'll find out who Satoshi is? Or do I think we will find out who Satoshi is? I think it's a government agency, right? It makes a lot of sense. Here, where's my tinfoil hat? Put that on real quick for you guys. So, we'll do some speculation here. So you've seen Render come out and utilize the GPU for the mining farms with Bitcoin in a separate manner, right? They're able to render videos significantly faster than traditionally done by Pixar or one of these other providers. And with that, I think you're going to see other use cases come up for the mining farms and the huge amount of compute that they've built out in these centers for mining, especially if Bitcoin's network were no longer to survive for whatever reason. Now they have all this infrastructure. What would they use that for? My speculation is, if you needed a high level of compute for AI, you've got all this infrastructure that's decentralized now for that. There's these other chains that are working on those types of applications. You've got AGI and SingularityNet. They're merging with a couple other ones, is what I've understood. So did they begin utilizing that infrastructure if it's no longer taken by Bitcoin for other applications? I think that's what they got built out for. I think that there was a lot of things that Bitcoin has done by being put into the market the way that it has and the way that things were structured to progress things along in a certain pattern. And we'll see if that rings true or not. Just depends on how things go. But yeah, I think Satoshi was more intimately involved at a global level, maybe with a consortium of banks or governments than people realize. And you asked, do I think we will get to find out who Satoshi is? I think when they're done with Bitcoin, they need an anonymous face behind it anymore. I think they let us know who wrote the code. Maybe somebody that's already passed away. David Schwartz says it wasn't him. But he says it's plausible that him and a few other people colluded together, but it's not true. That's how he ends it every single time. So he worked for the NSA. If he got the knowledge for distributed ledger technology, he filed one of the patents back in 1988. Arthur Brito. There's a lot of other key people that I think may have been involved in some capacity or known the real Satoshi. And like I said, if Bitcoin ever does meet a time where it's no longer going to exist, I think that's when they'll reveal who Satoshi was. Let's see here. Kevin Rose says, very good explanation. I'm 70 and my main goal is to protect my family, including his 12 grandkids. I'm happy for you, Kevin. I think you're going to be able to do that. I think a lot of people are going to be well taken care of because of the things that you've done for your family. Let's see here. Scroll on down. Victor, a follow-up. he says, thanks for your core values. We're about the same age, but you seem to have your stuff together. Some days I do, Victor. Some days I do not have my stuff together. I do my best, right? I try to hold myself to a high standard, but I fall down just like everybody else. It's good to hear about your drives and decisions. I'm trying to improve myself as well. And it's all it ever is. You just want to continually improve yourself over your whole life. If at any point it's sad to me, and I guess everybody has their own life, right? It's your life. You choose how you live it. For me, I don't ever want to be in a position where I feel like I'm regressing or stagnant. And you're going to be in holding patterns for a period of time. And there might even be points in your life where you do have to take a few steps back in order to reassess where you're going and make sure that you get pointed in the right direction. Sometimes we wander off path, right? But I'm willing to take those steps and reassess and do things and reposition if for the greater outcome. And so I'm always, the last value, like I said, I know that I know nothing. I know a lot about certain things, and I have, garnered some expertise and knowledge in those areas. The tax code could go out the window tomorrow, right? And then where am I, right? I still have the estate planning and the wealth management and some of the other components that I've been able to aggregate with that. But now I've got a whole new tax code or other constraints that I have to factor in. Same thing with, constraints around the global economy and interest rates going up instead of down. If we no longer have a fiat system and we have a collaterally backed system, how does that impact things? Theses will have to change, and I'll have to pivot and implement different strategies and learn new things that go along with that to make sure that I'm proficient with those things. So there's even little nuances in the stuff that I'm good with now, but things change, right? So always doing my best to improve. And that's why, I put that list together of the probably 45 or 50 people that I follow on a regular basis that I deem as better than me in the things that I want to improve upon. And I watch them, or I associate with people in my network that I believe are ahead of me, right? So some days I have my stuff together and other days I don't. So Victor, you're not alone on that. Here's a good one. Yo-Yo Entertainment says, what's the best way to protect my investments so that they're not attached to my personal name? So we help people establish an LLC just to get things in there out of their personal name. You are the manager. You own the equity in the LLC. So if you were sued, people could still come after the assets in there unless you have other people on the cap table and involved with the bank accounts or accounts as co-signers that aren't your spouse. Ideally, you have trusts in place and you've transferred ownership of the assets to the trust. Again, if you're the trustee, still some liability there. You want to segregate that out as well. And you would, the wealthiest people that I know own nothing and control everything, right? Because then they've mitigated the risk of loss for any, liabilities that they might incur, or creditors or debt or other things. And they've made sure that their family is set up long-term because the trust protects those things, it silos that and keeps it away from the loss that you could incur. So trusts and companies and the onion, that's what I call it, would be the best way to protect your investments and get them out of your personal name. And if you'd like to have a consult with us, you're welcome to book it through digitalfamilyoffice.io, or you can join the mastermind up here at the top. It's mastermind.beyondbroke.com. We talk a lot about all these things in there as well. Hey, cool. B is from Denmark. Good to see you on here. It's probably early there. Thank you for hopping in. Can you explain the TPS issue and whether batch settlement capabilities can compensate for it until it properly is resolved? That's basically what the implicit or explicit subnet would do. It would be able to batch transactions and run validators in tandem with the other ones and be able to settle those at scale. So you could do that through side chains also, right? So you're able to bunch of transactions on that, and then send one transaction on the main net. That's the way that banking works now. They run up a bunch of transactions, and then they'll send one payment to batch all those. Like I said, I think that there's a component that's a layer 2 or something else that'll be amended to the mainnet of the XRPL that provides the code base that's needed to be able to scale it. Because currently it doesn't exist, right? And I know that. I've talked to people that are developers that have much better expertise than myself. I'm like a tweener. I'm right in between. I can have conversations at a deep technical level with people that do understand those things and follow along. I can't speak to it at the same level that they can, because they have a much deeper understanding of the tech than I do. But I'm able to use my skill set as being able to listen to that and then distill that down to something that's understandable for the average person. And so, in short, your answer, yes. There's going to be something that'll allow for batch payments until there is the capability to scale to the TPS required. Would be my thoughts. And I don't think it'll be a layer 2. I think it'll have to be something involved with the layer 1. Let's see. MC Prosperity says, I'm going to sell it all into my checking account when it rips. What could go wrong? A lot could go wrong. So we're going to walk through a lottery winning scenario. Okay. Most people just play the lottery in their personal name. They're not using a business to buy a lottery ticket. Okay. Or a trust. Ideally you would be, but let's say you play it in your personal name. You win the Mega Millions. You are the winner. You win $300 million. We'll make it easy math. It's $100 million cash value off of whatever the total value is. Okay. They're going to take your taxes out right then before they even give you the distribution, because they know they're not going to get paid if they don't. So they're going to whack you with 40% of that right up front. So now you got 60 mil. Okay. And it's still in your personal name. And now you're going to want to move that into a trust or an estate. Okay. And so between you and your spouse, let's say you're married, you get 27.2 million that you can move into a trust with no tax implications. Anything above that, even if you don't sell it, so it's cash. So you could move that into a trust, but again, you can only gift the 27.2 million. So you're going to owe another 40% tax on anything beyond that just to move it into the trust and get it out of your personal name. So now, what's 40% of another 30 million? We're looking at another $12 million that you're going to owe in taxes just for moving it into a trust. So now you've been whacked with 40 million up front, and then you got to pay another 12 million just to get it into a trust. So now you're left with $48 million when it's all said and done and you're structured and set up after you won $100 million. Let's say you bought the ticket with the trust money, and you win the $100 million. There's ways that you could defer those taxes and roll them if it's inside the right type of trust, and not pay them. So that's one of the benefits. And then the other, the lesser benefit there, let's say you do pay the 40% on the income. You don't have to pay the 12 extra to move it into the trust because it's already in there. So anyway, there's benefits to utilizing LLCs and trusts in that aspect. If you do cash out, so you're selling an investment, it's not just a cash distribution that's going to be taxed as income. You're going to be liquidating the asset, and When you're doing that, you're going to be incurring capital gains, right? So if it's the same year, it's going to be short-term capital gains, which again be taxed at a similar threshold that I mentioned before. If it is long-term capital gains, and it's a large amount, you're going to be whacked with 20%. That might be okay. Some people are cool with that. And I'll say that I have met with people that they're like, it's a lot of trouble to set up an estate, and it's costly, and I don't understand it all, and so I'm just not going to do it. It's easier for me to just know that I'm going to pay 20% taxes on my money, pay it, and I'll be good. I'm like, okay, well, then you still aren't mitigating the risk. If somebody sues you and they have emotional damage, or you run into a power plant, or like there's, God forbid any of those things happen. But crazy stuff happens to people, okay? Crazy stuff happens to good people. And if they're not protected, they can lose their assets, right? So you want to set things up for your family and your kids, because again, if it passes from you to them and it's not in a trust, it's going to have estate taxes and probate, and it's going to be publicly disclosed who got what and how much, and they're going to have to pay the taxes on it. So trusts are good for that as well. And then you mentioned going to your checking account at your bank. If you haven't ever moved large volumes through your checking account at the bank, and you just have an average checking account, it's not a business account or a trust account, you haven't spoken with a banker, they're going to flag that and freeze it as soon as it shows up. Okay. If it's 1 or 2 zeros more than you've ever transacted in your bank account, that sucker's locked down. They're going to want to know where it came from. They're going to want to know everything about it. So to be proactive, I would go have conversations with your bank. I would set up a bank account specific for taking profit underneath your LLC or trust that you've established for your assets, and let them know that you've made strategic investments. This account that you're setting up is for the management company of the investments, and it will be taking profits to it when they do pay out. And you don't have to tell them what you're invested in. Do not say crypto. Don't say digital assets. Don't say any of that. Just say, strategic investments. We look at private equity, we look at real estate, we look at all the other opportunities, and we make investments where we feel is appropriate. Just leave it mysterious. But anyway, so those are some of the potential issues that you could have if you just decided to just sell it all. And then if you don't have an OTC account, you're going to be paying through the nose on fees, and you're going to affect the market significantly when you sell your asset. That's another thing, right? So, you're going to have a ton of slippage. You're going to have high fees. It's just going to be a mess if you're not utilizing TWAP or VWAP, or if you're using an OTC broker like we have access to as well. So anyway, if any of that interests you, you can book a time with us. It's digitalfamilyoffice.io, and we're happy to help you get all those things set up previous to price appreciation and taking profit. Lots of good people here in the chat. Here we go. Marie, thank you for the super chat, ma'am. She says, "Hey, Jake, no question. Just want to say thank you and admire and respect your core values." Thank you, Marie. That's much appreciated. And thank you for the super chat. If you're the Marie I think you are, thank you for being in the mastermind also. And it's good to have you here and in there as well. Boinked. I think that's how you say it. Does your company offer services internationally, for instance, in Australia? Yes, we do. We custody assets for clients in Australia currently. I had a call today with a gentleman that was from Australia very early in the morning there. It was like 2 p.m. here. He got on the call like 5 a.m. to meet me. God bless him. I've gotten up early to meet people in Australia too. So, goes around, comes around, like I said. Anyway, pretty cool. People on the other side of the world want to talk to me for some reason, which is never would have thought. Anyway, yeah, we do have partnerships there in Australia, the UK, the Middle East, South America, Canada, and the broader EU. We have partnerships where we can help set up estates for people, place capital, set up bank accounts, CPAs, accountants, all that stuff. A lot of the stuff that I've catered here in the US, I've tried to connect with people internationally to be able to provide similar services in other jurisdictions. And again, we can work with you as a wealth manager here and custody your assets if you do want to hold those with us and work with our firm in the future. So happy to have that conversation. If you, again, just digitalfamilyoffice.io, or if you're more concerned on the wealth management side, it's digitalwealthpartners.net. Let's see here. All the way down to the bottom. Wow. Here we go. Christoph Burr, differently spelt, but cool. When wrapping and moving tokens like BTC due to energy consumption, when wrapped and moved, is BCC burned? With regs, will it be possible for institutions to trade wrapped BTC, no underlying asset? So wrapped BTC is not burnt. It's just escrowed in an account, and then they issue a derivative of that on another blockchain. Okay, so like if you want to utilize BTC or the collateral that you have in a DeFi protocol on Ethereum, then you can lock it in an account and a wallet, issue the wrapped Bitcoin, which is a representation of that value that can be transacted on Ethereum, and then use that within the DeFi protocols to issue loans against it, or provide it as collateral for other things and earn a yield. That'll continue, right? So to be able to utilize different assets as collateral on opposite networks, wrapping is going to continue. You're not burning the asset. I could talk about a separate concept where you're transferring NFTs from one network to another, where it does get burned on the initial one, but that's a separate issue. For what you've discussed here, there's no burning. It is quite possible for institutions to trade wrapped BTC or other assets that were wrapped on other networks. I think Bitcoin, for it to scale, it probably ends up getting wrapped on the XRPL. And again, you could batch all those payments, trade them back and forth, and then settle up on the main net for Bitcoin if it still exists long term. And then Chris, this is a different Christopher. He says, why is no one speaking about ODL being in question in this case? Like it's not the entire life of XRP as we know it. Am I missing something? So there's a couple reasons for that. It's not the entire life of XRP. We have AMMs now, automated market makers, and you're going to have other amendments that allow you to use XRP in separate capacities than just loaning it out to financial institutions as liquidity. Uphold is Ripple's partner for ODL. So most of the time, the XRP doesn't even go to the financial institution that's taking the loan. They want the fiat representation of the value that they've taken the loan in XRP in. So let's say it's a bank in Europe that wants to partner with Uphold and Ripple to be able to take loans to provide liquidity for them at a reasonable interest rate. I don't know what the interest rate is, but I do know the time frame. The time frame is on a weekly cadence. So Ripple issues the loan to this bank after doing the underwriting and making sure that they're credible and can pay it back. They give that XRP to Uphold. Uphold swaps it for euros. They send the euros to the bank. The bank uses that for a week. They pay it back with interest, and then they swap it back for XRP and send it back to Ripple. So in that circumstance, the bank actually never gets the XRP. They don't need it. The circumstance in which they might utilize XRP to settle would be, and still a similar operation, until we have CBDCs and stable coins that are issued on the XRPL, they're going to continue to be they're going to have to use Uphold to exchange it for the currencies that are needed, right? So certain jurisdictions you don't want to hold capital in because the inflation there is so high that your money's just wasting away, right? So until Zimbabwe just recently backed their currency with gold, you didn't want to hold the Zimbabwe, whatever the name of their currency is, because it was hyperinflating. So if you threw $100 at it today, it's worth 90 tomorrow. Like, no, not leaving capital there. So you would use XRP to settle into those corridors, or ODL to settle into those corridors. So you would borrow liquidity from them to be able to settle in whatever currency the other party wanted, and then pay it back, right, in whatever currency you wanted to pay it back in. And again, Uphold's just converting that to XRP and sending it back to Ripple on the cadence that you're using it. So ODL itself, once it'll be much more effective to utilize XRP in that circumstance. Once we do have stable coins that are representations of fiat currency on chain. So I think that's really kind of why it's been left out of the case. It's one of the service products that Ripple offers, but it's not violating securities law. And the SEC really doesn't have a way to come after them for that, I don't think, because they're not selling it, they're just lending it out. And they're disclosing the risks with people that are agreeing to do that also. So it's not really a security, and the XRP itself's been designated as not a security, so it's a contract, but it's a normal contract for lending. Like, there is no securities offering there. So it's not really anything that the SEC can go after. So hopefully that answers your question. I know that was really long-winded, but I think that you're going to continue to see more and more use cases for XRP aside from ODL. But that is something that, our firm is looking to partner with Ripple on, potentially, since we do have our account for custody and wealth management at Standard Custody and Trust, and they have made that acquisition. Be looking to do that. Hopefully we'll have a conversation with them soon around that topic. Christopher says, continuation on wrapping. If the network is shut down, would the wrapped assets still hold value? Buy a car, sell a receipt, burn the car. Receipt increase in value on secondary market or not? I don't know that the example that you gave there is corollary to this situation. I mean, I can see it. I can see how you could, yeah. The value of the asset is what people place on it, right? There is no inherent value to Bitcoin. What does it do? There's no inherent value to gold either, right? It's what people are willing to pay for it, because there's a finite supply, or people believe there's a finite supply of Bitcoin, and whatever value people are willing to trade it for is what it's worth. Tulip bubble, right? Same deal. If I say it has value and you say it has value, then it has value. Seashells or money at some point. Okay. So as long as the parties transacting believe that the underlying asset has the value that they've stated in the contract between the two of them, and it's wrapped, irrespective of if the network that it used to be transmitted on was shut down, then it has value. Now, if the network shutting down, penetrated the ethos of people's paradigm, and they believe that it no longer had value, and that wasn't just a common understanding between me and you, then it probably wouldn't have value. So I don't know. Really, the answer is I don't know. I don't know if the network, the effect of devaluing the asset or not. There's going to be people that are diehard Bitcoin until the end. Okay. And for those people, it's probably still going to have value. I kind of think, and I'm pulling this out of thin air. Okay. So don't take it with a grain of salt. I think Bitcoin probably does have a similar value to gold when everything shakes out, if it's still around. So if gold's worth 2,000, 5,000, whatever you think it's going to go to, I think Bitcoin will probably have a similar value as collateral. And I think it'll still be volatile. I think people will still speculate and trade on it like they are today. I don't think it'll ever be a consistent value in perpetuity. And it won't be a hedge against inflation either, in my opinion. All right. Wow. Thank you, Lee. Thank you for the super chat, brother. He says, hi, Jake. Is there a minimum amount of XRP hold before even considering opening an LLC? What's that number? Incredibly green. Both parents are artists. That's a cool profession. I used to draw a lot when I was younger. So I have an appreciation for that. unless you're very well known and you can market well and you get the right, agent and other stuff. I don't know if it's an agent. I don't know what you call people in the art world. It's hard to make it as an artist, and a lot of people's art isn't even valuable until after they're dead. So hopefully your parents are successful artists, and hopefully they have an LLC that they use to take profits, but maybe they don't. What would be a minimum amount? I have a calculator that I put together a while back, and you can put in the value of the XRP today and where you think it's going to go, and then that kind of determines when it's reasonable or not. And it also, you have to take into consideration how quickly you think the XRP is going to get to the value that you put in the calculator also. I tend to believe that there is going to be just, a big jump in a short period of time when there's a liquidity crisis and it's needed, and they roll out regs, and we're off to the races. But I'm just going to give you some round values here, and hopefully it's meaningful for you. If you were a single individual and your gift tax threshold is 12 point, what is it? It's 13.6 million now. It used to be 12.92. They've upped it to 13.6. It's the highest it's ever been in your lifetime, in my lifetime. Anybody who's watching this is the highest gift tax threshold that we have ever had in the U.S., and it's likely that it will go down from here, in my opinion. So if you think your assets are going to be in excess of 13.6 million as an individual with price appreciation in a short period of time, at that point would be the time that I would definitely look at getting an LLC. If you are planning to take more profit than $500,000 or $1 million when price appreciates, probably good to have an LLC. If you are married, you double that amount, right? So, let's just give you round numbers. And as an example, let's say you had, to get past the $13 million threshold as an individual, you would need, 130,000 XRP at $100 a piece. Put you real close to that. It's probably when I would start looking. Maybe a little bit before that, maybe even around like 80 or 100,000 XRP. Might be a time when that makes sense. If you think it's going to $100 in a short period of time, like I do, when it goes. And then, again, like if you're married, it would be double that amount. So you'd be looking at like, 200,000, 240,000 XRP. You might start looking at an LLC. Same thing with the trust. Probably there's a gap in there between the LLC and the trust where spending the $15,000 to set up the trust doesn't make sense because it's not going to offset the amount of taxes that the investment would have made if you had put it in the investment. So, maybe add, what do you get? Another, probably halfway between there. So another 15,000 XRP or 20,000 XRP on top of that. Might be when you start looking at a trust. If you have the means to do it or the want to do it, to make sure that things are set up beforehand. And I'll just say this, we have lots of ways to mitigate taxes if you don't do any of this. Okay, I've tried to make sure we do have ways to mitigate risk and tax implications for anybody, irrespective of if they are proactive or not. Obviously, you save money, time, and stress if you are proactive. So your pick, up to you. But those would kind of be the thresholds I'd be looking at for minimum investments and how much XRP you would hold before you might look at an LLC or a trust. So thank you for the question. I'm sure there's lots of other people that were thinking about that, but it's a good one. Almost at the 2-hour mark here, so I'm probably going to run it down for another 5-10 minutes, and then we're going to wrap it up for tonight. But I will hang out with you guys just a little bit longer here. Shane says, are global Jake Claver gyms in your future? Maybe not, probably enough profit margins. You would be surprised at the profit margins on some of the gyms. Most people that have memberships to gyms never show up. They say they have a gym membership and they just never go. Anytime Fitnesses used to be extremely profitable. The people that were in early there on that franchise have been grandfathered in. It costs a lot more to open a franchise, and you don't make anywhere near as much profit as you used to. I am not into physical infrastructure unless it is just a boring business that already exists and already cash flows really well. And somebody's close to retirement and wants to give me a good deal on it. And I want them to get a good deal too. We're willing to do owner financing and pay them better than the market a lot of the time. So, stuff like that. But most of the time, physical infrastructure, I think it's cool to tokenize it. But actually managing. So just to give you an example, like we have a little business here in my town that my wife and I are involved with, and the amount of headache and not profit that comes from that little business has given me like just a bad taste in my mouth for running a traditional location of anything. I might have a gym in my home. Even then, like I like going to commercial gyms. I like being around people. I like having maybe a side conversation or two while I'm working out. A little bit of it is social for me. If I'm training for contest, I'm not that way. Like I'm hammered down. I got my earbuds in and my hood on, and I'm not talking to anybody. And if you try to talk to me, I'm gonna be pissed off and give you the look. My zone. Don't mess with me. But yeah, I don't really have any interest in opening or franchising gym locations. Unless, I could be, I don't want to run it, but I might like partner in like a Lifetime Fitness or something like that, or LAs, that do cost a bit more to build and get started, but tend to be really lucrative. They tend to have high profile people that attend them and pay for the training. They tend to be pretty significant margins, especially at a Lifetime. So that would probably be the only franchise that I would look at partnering in. Again, I don't want any obligation or management duty, but I might look at putting some money in that, depending on who approached me and their background. And then last, we got Muhammad here. This is good. Muhammad's asked, what is the relationship between XRP and Ever? I received an airdrop of Ever, but I have no idea if it has any utility or if it will have any value in the future. So Evers are part of Evernode. One of our strategic partners under Digital Ascension Group for a company that we have equity in is developing using Evernode and hooks and Zahao. So it's quite possible that it will have value. It's utilized within that infrastructure. It's a repository for smart contracts that allows people to basically earn a yield. So let's say you developed a smart contract that you think could be used in some other capacity, rehypothecated or iterated on later on. You would put it in that repository and be paid in Evers for people utilizing that piece of code in their infrastructure later on. I think it's a cool idea. I think that a lot of people will build stuff there and put it there and potentially earn small amounts of money over time when their code is reused. So for you in particular, I don't know if it has any benefit. I really don't understand, the tokenomics behind the Ever token. I haven't really looked into it enough to understand. I just understand what the project is and what the vision was for. But the Ever token itself, I think it's for paying people out for the use of the smart contracts as a reward for other people using them in their GitHub or whatever infrastructure. I don't know that you can stake it or earn rewards or do anything with it aside from that, but I think it will have some value on the secondary market so that people can exchange it. So yeah, hopefully, I know that probably wasn't an in-depth answer that you were looking for, but it may be a little bit more context than you had previous. And then lastly, we got Shawnee Montana He says Torres rules in favor of Ripple, but they bring Ripple back to the table for a settlement. Why? Like what benefit would a settlement, like if Ripple was going to settle, they would have settled. They had offers to settle. They did not. They did not settle. I'm not going to say we're not going to get a settlement because I'm not a lawyer, okay? But I'm extremely confident that is not going to end up being the case, and that the judge will issue a ruling that gives constraints around how to come to market, and that'll set precedent until Congress gets some regulation. But it will also allow the SEC to go after other projects in the space and overturn some things maybe, and maybe right some wrongs that they had early on. So, and I think if they do that, right, if there is precedent around how to come to market and the judge does create a ruling like that around, how it should be done, then all the ICOs and other bad actors in space probably have problems. So that includes Hedera, that includes XDC, that includes all of these other tokens that had ICOs that involved U.S. investors on the cap table and paid distributions to them, or American funds, that participated as well in the offering. If they were not registered with the SEC in their ICO, and it's not a utility token, or they didn't come to market the same way that Steve Nareyoff said that they should, I have concerns, right? And that's also why I don't currently own HBAR or XDC, even though I think that long term they have fantastic, use case and probably adoption. I don't know, because they did have an ICO, what happens to them. And I know they did sell to U.S. investors, and at least a few of them. So anyway, my 2 cents. Thank you for the good question. Well, the statement, I guess, that I could give the rebuttal to. And yeah, I absolutely appreciate you being here. And, I like going back and forth on that. I like outside perspectives on things because it makes me question, again, my own biases. This is just my opinion. I have no way to know one way or another, but this is what I think is going to happen. So, anyway, with that, we'll go ahead and wrap it up. I hope you all have a wonderful evening. Thank you all for hanging out with me for as long as you did. As always, if you do think, the mastermind might provide you some benefit, you can check that out. I guess it's up here. It's mastermind.beyondbroke.com. Really good community there. Like I said, proud of the culture that we've been able to build. We do run private investments through that group. So if that's something that interests you, hop over in there and see what we got going on. And then, Digital Ascension Group, if you want to book a time with the family office or Digital Wealth Partners, you can do that through digitalfamilyoffice.io or digitalwealthpartners.net. So with that, we'll wrap it up. Y'all have a wonderful evening, and we'll see y'all on the next one.